Look, if you're actively trading crypto, you already know the massive hurdle of evaluating platforms. The countless options out there, it's overwhelming, even for the veterans among us. So today, we're cutting through all that noise. In this explainer, we're giving you a structured way to evaluate exchanges so you can find that perfect fit for your specific trading strategy.
Which really brings us to the core question: which crypto exchange is actually the best? The stakes here are very real. Picking a subpar platform can literally drain your capital through hidden fees, or worse, put your assets at risk through weak security. To answer this, we have to look way past the marketing hype and focus strictly on the underlying architecture of these exchanges.
Here's our quick roadmap for today's explainer. 1. The crypto exchange dilemma. 2. Pillar 1, understanding fees. 3. Pillar 2, prioritizing security. 4. Pillar 3, trading features. 5. Top exchange picks ranked. And finally, 6. Making your final decision.
Starting with Section 1, the crypto exchange dilemma.
Okay, let's dive right into this. When you're evaluating the market, you really don't need more options. What you need is a structured framework. Think of it kind of like a house's foundation. We like to use the 3 pillars framework. Step 1 is analyzing those fees. Step 2, evaluating the security protocols. And Step 3 is reviewing the trading options. If an exchange falls short in any of these 3 areas, it's just not a viable home for your hard-earned capital.
So let's move into Pillar 1, understanding fees. The crucial point here is that exchanges don't just charge you once. Oh no, they hit you on deposits, on withdrawals, and on the actual trades themselves. Generally, you're going to see 2 main models for this: flat fees versus percentage-based systems. A flat fee stays completely static regardless of your volume, whereas a percentage-based system scales right along with your trade size. You've got to assess which structure actually aligns with your trading frequency and volume. Doing that is absolutely crucial to protecting your profits.
Next up is Pillar 2, prioritizing security.
Because honestly, what good are ultra-low fees if your assets are totally vulnerable? Security is absolutely non-negotiable. Two-factor authentication, or 2FA, is the bare minimum baseline for account access these days, but top-tier platforms, they go much further. They pair robust 2FA with heavy data encryption and really comprehensive insurance policies against major breaches. You also absolutely need to look for institutional-grade cold storage. This means keeping the vast majority of user funds entirely offline, essentially making them immune to web-based exploits. You want to make absolutely sure the exchange actively utilizes cold storage and subjects their systems to regular third-party security audits just to constantly stress test their whole architecture.
Moving right along to Pillar 3, trading features. This pillar is all about matching the platform directly to your strategy. On one end of the spectrum, you have basic spot trading interfaces. They're clean, streamlined, but pretty limited. On the other end, you've got advanced dashboards offering complex tooling. We're talking futures, margin trading, high leverage, and automated bots. An advanced trader is going to feel completely bottlenecked by a basic interface, so finding your structural match here is key.
And beyond the main dashboard, secondary user experience factors can completely make or break your workflow. You definitely need deep liquidity for instant, accurate execution without annoying slippage. You need 24/7 support for those inevitable technical snags, a wide selection of cryptocurrencies for diversification, and really robust mobile functionality so you can easily manage your positions while you're on the go. All right, let's put this into practice with Section 5, Top Exchange Picks Ranked. Applying our 3 pillars to the top-ranked exchanges, some very distinct profiles start to emerge. KuCoin holds a very strong 4.8 out of 5 rating, and it's heavily favored for aggressive, low trading fees and a massive altcoin selection. Binance, sitting at 4.6, expertly balances robust accessibility with advanced instruments like futures and copy trading. Meanwhile, Bybit comes in at a 4.5, favored for its heavy margin trading, staking, and ironclad 24/7 support. Segmenting these options even further can really help you out. If you're looking for a highly streamlined, beginner-friendly environment, platforms like Coinbase and Gemini are optimized for exactly that. But if you require premium institutional services, robust lending protocols, and complex staking infrastructure, heavy-duty exchanges like Binance and Bitfinex are built to handle that exact demand.
Which brings us to our final section, making your final decision.
You've seen the frameworks, you've reviewed the security protocols, and we've walked through the top contenders. Look, there is no magic one-size-fits-all answer here. So I'm going to leave you with this final, vital question. What are your specific trading goals, and which of the 3 pillars, fees, security, or trading features, matters the absolute most to your strategy right now? Prioritize your needs, utilize this framework, and execute your trades with confidence. Thanks for joining me for this explainer, and I'll catch you next time.